So if you're a manager within an organization and you've been given the responsibility for a budget, so they might call you a budget holder. If you become a budget holder, it might be a promotion you get. They say, right, we're going to make you a budget holder. What does that mean? Well, it means that you will effectively, if you like, own a budget, and that means you're responsible for it. So in the first instance, when the budget is being created, you will be asked to provide information to the finance team. And what the finance team will usually want to know from you are the things that they don't know, the things that they're not experts on. So they won't go asking you about things like what's your rent for the premises that you're occupying or the business rates, because they'll know that stuff. They'll know how much is being paid for insurance and so on, all those fixed costs. But they won't know how many staff you're going to have in your team, what your plans are for recruitment, what your plans are for promoting people, what pay rises you want to give people, what you're going to spend on training, what you're going to spend on staff travel. All of those things, they'll ask you, they'll need to know that from you. So that's at a very basic level. A manager will be involved in the budget. And then once the budget is created, moving on, you will then be responsible for the management accounts, and you'll be sent the management accounts, which will show you how you've performed against that budget, or how your departmental costs have performed against that budget, right? So you're generally, as a manager, involved in managing the profit and loss budget, or at least a part of it, the part that you control. Now, the level at which you get involved will depend on what you're a manager of. So the different levels are, you could be a manager of an investment center. Now, that's the top level, right? If you're a management of an investment center, in many organizations, you'll be actually on the board of directors, either the board of directors of the main company, the holding company, or of one of the key subsidiaries. Because if you're in charge of an investment center, what you're responsible for is the whole profit and loss account for that business, all the income, all the expenses, and the investment decisions. So whether or not you buy new fixed assets, you'll be involved in that. So that's if you're responsible for an investment center. That's quite rare. Not many people in an organization will have that level of responsibility. So a bit more normal is to be a profit center manager. So you'll be responsible as a profit center manager for a whole business unit that's got its own income and its own expenditure. It's basically got its whole own full P&L, and you'll be responsible for managing that. So you'll be involved in all aspects of budgeting for income and expenditure and overseeing that. But the most common one in practice, and the one that most managers fall into, is that they're cost center managers. So they manage a cost center. So that might be a department or even part of a department. So you might be managing the administration team, or you might be managing the HR team, or you might be running the finance department. That's a cost center manager. So you're just responsible for costs. So you'll be expected to contribute to those costs. When the accounts team ask for your budget submissions, they'll be asking for your submissions relating to costs, relating to the number of staff you're going to have, for example, within your team over the coming year. And going alongside that, when you get your management accounts as a cost center manager, you will only see part of the profit and loss account. You'll just see the bit that you control. So you won't see the income. You'll just see the costs that are within your control. So that's cost center managers. So you could be a manager at any one of those three levels. Most people who are watching this video will be cost center managers. And so they will just be involved in supplying information to the finance team all around their own costs. So that's the role that the managers might take. Now, it's good to have an insight into how budgets are created in practice, because it can help explain the behaviors that go on within the budgeting process and how you might be asked to do several different versions of your budget. So let's give you a scenario. Let's say we've got an organization, a simple organization, and it's got two businesses within it. It's got Division A and Division B. And Division A is a full business, got its own income and expenditure, and Division B is another full business. Okay, so what will happen in the budget process is that Division A will do its sales budgets, and it'll do its cost budgets, and it'll put them together, and it'll do a P&L budget for Division A. And at the same time, Division B will be doing exactly the same thing, putting together its budgets for the following year. And then what will happen is the head office will want to get hold of those budgets, those profit and loss budgets in the first instance, and those profit and loss budgets will be sent up to the head office of the business. And the key thing that they will be interested in is, how much profit are we going to make if these budgets are fulfilled? What are we budgeting for in terms of profit? And then at that stage, we might have a little bit of a problem, because if you remember back to the first of these two parts, we talked about strategy and we talked about strategic objectives. So let's say this is year 2 of the strategic planning period that we're looking at. And in the strategy, our aspiration is to make 6 million profit. And once the budgets come back, we find that we're only budgeting for 5.5 million profit. So we're half a million short on our budget. We're half a million short of where we want to be in our strategy. You know, when we created the strategy, I explained to you that we'd create outline budgets at that stage, and that 6 million is in our outline budget. And it's really important that we keep on track so that we can fulfill our ambitions with this strategy that we're performing. So what the business will do is we'll have a look at those budgets, and then it will go back to the divisions. And let's say, for example, that the head office felt that Division B wasn't quite pulling its weight. So they went back to Division B and they said to the people running Division B, the profit center managers or investment center managers, it could be, and they said to them, look, you need to pull your fingers out. You need to do more. You need to go back to your team and you need to get more out of this budget. You need to think about how you can make more money next year. And then the managers in Division B would go back to their managers and they would say, look, can we see if we can get some more sales in? Can we be a bit more creative with our marketing approaches? Can we save money and make efficiency on our costs? Yeah. And once that's been resubmitted, then it'll go back into Division B's team, and Division B's team will then send it back to the head office, and the head office will have another look at it and they'll see whether it's in line with their aspirations. And if it's not, they might send it back again. And they might also send Division A's budget back at the same time, just to see whether they can squeeze some more out of their budget plan, so that in the end, we do come into line with what we expect in the strategy. Now, it's very frustrating as a manager if you put your budget submission in and you do it to the best of your ability and you think, right, I've done that perfectly, thank you very much, put that to bed, go on, get on with my normal work. And then a few weeks later, or even months later, it comes back to you and you're asked, well, can you see whether there's any further savings we can make? It can be frustrating, but if you understand the process that's going on and why it goes like that, why it has to happen more than once, then that can help, I think, ease those frustrations, and it helps you understand the way that businesses work as well. Okay, right. I want to finish with a couple of things. First of all, a summary. So we're going to do a summary of the whole course, and then we'll move on, have a look at a couple of multiple choice questions. So let's just think about the things we've learned in our budgeting for non-finance people. First of all, the budgeting is an annual process. We do it every year. When do we start it? Well, we start it before the year end. That's obvious really now, isn't it? How soon before the year end depends on the organization. Some organizations, it can take 6 months to do a budget. Some organizations can get it done within a couple of months. But the key thing is that we get something that's accurate and achievable, and we get it done and finished and agreed before the end of the year. We don't want to be still doing the budget when the new year starts. And I know that sounds odd, but some organizations are still finishing off their budget, even though the new year has actually already started. And we don't really want that. We want the plan. We want it clearly communicated. We want the investors to know about it. We want the people in the business to know what's expected of them. So it gets done before the end of the year and we get this accurate and achievable document finished. What we're doing in the budget, the key thing is predicting next year's profit and loss account. That's the key budget that we're doing. The cash flow budget also is very important, as is the capital expenditure budget, but everything flows from that profit and loss budget. The profit and loss budget and the cash flow budget will be produced as annual statements initially, and then they need to be broken down. And the more accurately you can break them down into each individual month, the better, because it will help you track against your actual performance. The budget is used as a way of comparing actual to budget to see whether you're on track, because your budget is used to tell your shareholders how you think you're going to do, and you want to then track against that budget, because the budget will be what the shareholders are expecting you to achieve, and you want to track the actual performance to make sure you do that. And lastly, you as a manager or an owner will be involved in budgeting. And if you're not, you should be, because the finance team can't prepare a budget properly unless they get help from the people who actually know what's going on at the front line of the business. And that's probably going to be you. Okay, let's finish with a couple of multiple choice questions. Again, you can pause these, pause me at any time and have a go at the question yourself. Of course, you should do. So what is a variance? You can pause me now. Okay, I'm back in the room. Answer B. It's the difference between actual performance and budget. And it says in B, actual performance and budget for the year. Yeah, that's the yearly variance, but you can calculate variances on a monthly basis. But a variance is a difference between budget and actual, whatever period you're calculating it over. Okay, question 2. Again, switch me off if you need to. What is usually the critical factor in producing your budget? What's the critical factor? Pause me now if you need to. And I'm back in the room. The answer is A. It's the income. Income levels are the critical factor. They drive everything else. Once you know the income, you can have a go at doing the outputs, the direct costs, the overheads, and then produce your cash budget and your capital expenditure budget and so on. But that's that critical factor, is how much income do you think you're going to earn in the following year? So there you go. That's the end of our budgeting for non-finance people. I hope you found it really useful. I'm Steve from Clearly Training. And if you want more help with finance for non-finance people, you can visit our website and have a look at that. Have a look at the courses we're putting on. Have a look at the online things we do. Or you can come back to the Udemy site and have a watch of some of our paid for videos as well. Okay, thank you very much for listening and hopefully see you soon. Thank you. Bye-bye.